Explaining swaps. If we have a quick look at what swaps are, then we can decide whether or not they're relevant to our trading. So let's have a quick look. The swap rates are based off the interest rates of the currency pairs you are trading. In our example here, we're looking at the euro dollar. So you can see the current interest rate of the euro is around about 2.14%, whereas the interest rate on US dollar is about 4.5%. So what's this mean? Let's have a look if we were to buy the euro dollar on a Forex pair. So we're buying the euro, which means we're selling the dollar. So if we were to hold that trade overnight, we would gain 2.14% interest from the euro that we bought. But of course we sold the dollar. So we'd lose 4.5% interest on the dollar we sold. So buying the euro dollar would give us a negative swap, as the interest rates on the euro is less than the interest rates on the dollar. There are other things that affect the swaps also, but let's keep it basic. So long in the euro dollar and holding overnight, we are going to get charged a larger swap compared to if we were to sell the euro dollar and hold overnight. You may still get charged a swap, but the swap amount will be far less compared to holding a long trade overnight, due to the different rates of interest on the two currency pairs. Looking at a few different prop firms, you can see here on the fivers, holding a long trade on euro dollar, the swap is minus 10.1. Holding a short trade on euro dollar overnight, still a negative swap, but the amount is far less, because the interest rate is higher on the USD dollar compared to the euro dollar. Quick look at FTMO shows similar results. A long trade would be a negative swap of 10.36. Short trade, in this case, is actually positive at 2.99. Quick look at Definitive Funding, you can see the long trade is minus 5.96, whereas the short trade is plus 2.74. So no matter which prop firm you're with, it's going to cost you more to hold overnight in a long position on euro dollar compared to holding a short position overnight on euro dollar. Just to recap, this is because the euro dollar and the USD dollar have different interest rates associated with them. And in our example, the euro dollar has 2.14% interest and the US dollar has 4.5% interest. So that means to get more favourable swaps, we would prefer buying the dollar and selling the euro if we were to hold overnight. So does this really affect you? This depends on the type of trader you are. If you're a swing trader holding these pairs overnight for multiple nights, then yes, it's something you need to consider. If you're an intraday trader or even a scalper, unless you hold the trade to a new day's candle, then no, it doesn't really affect you. One other thing worth pointing out is on a Wednesday, they have something called triple swaps, where they will charge you 3 times the amount of the normal day. This allows for the extra 2 days at weekends, Saturdays and Sundays, but they charge those 2 days on a Wednesday. So it's single swaps on Monday, Tuesday, triple swaps Wednesday, single swaps Thursday, Friday. That is the case for currency pairs. Indices charge triple rates on the Friday. The daily close candle is usually 5 PM New York time, which is 10 PM UK time where I am here. So if I'm holding a long trade on euro dollar past 10 PM here in the UK, my swap charges are going to be more compared to if I was holding a short position on euro dollar overnight here in the UK past 10 PM. Some companies, as we've seen, charge you negative swaps in both directions, but the rate of those swaps will be greater if you are buying euro dollar compared to selling euro dollar here in this example. And that's it, just a quick video to explain swaps briefly. Me and one of my trading friends were discussing this the other day, and I realised that a lot of people don't really know what they are, or even if they need to know what they are. So this was just a brief explanation just to give you some basics on swaps. Thanks for watching, and I'll catch you next time. Bye bye.